Are you confused about buying, leasing, or financing a car? Today, we are doing a deep dive into whether you should buy, lease, or finance your next car. I'll break down each option, what buying means, leasing, or financing. I would also discuss their financial impacts. We would also explore which choice offers the best value for money, how each one affects your long-term financial health, when it makes sense to go with one option over another, and lastly, the secrets that car dealers don't want you to know about. I went through the process recently to buy a new car and used that opportunity to ask all the questions so that you won't have to ask them. And that's in addition to the plenty hours of research just to double check and reconfirm a lot of all those information. So let's get right into it. First, let's explain the different options available to us when we want to buy a car. The first is to buy outright, to pay cash. And that's very explanatory. You pay full price. You don't bother about any monthly payment, and you're done. The second option we'll look at will be you're buying the car through some sort of finance. And in the UK, there are different ways to be able to achieve this. You can either go through hire purchase, which is called HP. You could go through personal contract purchase or PCP, or you could just get a personal loan from the bank or any lender. The hire purchase and personal loan works in similar ways, but with just slight differences. With a personal loan, you get the money upfront from a financial institution, hopefully, and not a loan shark. And then you decide what you want to buy with that money. If you decide to buy a car with that money, you own the car outright, just like the case of cash. But most importantly, with a personal loan, that loan is usually unsecured and there is no collateral that is backing that loan. So what that means is if the loan goes bad, usually it's going to affect your credit score, damage it, in fact, and you could face legal action from the lender to help them recover their money. While for hire purchase or PCP, the car is actually owned by the lender and not you. And then you keep making payments until you've fulfilled the term of the contract. And also the same car is the collateral for the loan. With hire purchase, you pay a deposit towards the car and then you borrow the remaining amount at an agreed interest rate for a certain period, let's say 3 years. And then over that period, you make monthly repayments, and at the end of that period, you own the car outright, which is very similar to the personal loan, with only difference being during that period before you complete your payments, you don't own the car, and the car is also the collateral or the security over that loan. For PCP, you also pay an upfront deposit. Then the dealer tells you what the guaranteed future value of the car would be at the end of the payment period. Now, this guaranteed future value is usually called balloon payments. Then you borrow the difference between the deposit and the balloon payments, and then you pay monthly, of course, at a fee. And at the end of that period, you usually have 3 options. One, you could decide to own the car, and that means that you make the final balloon payment or the guaranteed future value that you've agreed at the beginning of the contract. The second option is to return the car back to the lender with no further obligation to you. And the last option is to trade in the car for a newer model and potentially start a new PCP agreement with a new balloon payment. We have looked at cash. We have looked at the different finance options. The third option to buy a car is to lease the car. That is also called personal contract hire, which is basically you're renting the car for a certain period. And at the end of that period, you return the car. Usually for leasing, you pay a deposit followed by fixed monthly payments. These monthly payments are typically lower than HP or PCP because you're not paying off the entire value of the car. Instead, you're repaying just the amount of the car that depreciates during the period that you're with the car, of course, plus interest. What then is the best financial decision when buying a car? I have a favor to ask you, and it's at no extra cost to you. If you're finding this information useful, please hit the like button. It tells YouTube that you've actually found the information useful and it helps the channel a lot. To know what the best financial decision is, we have to calculate something called the total cost of car ownership per year. And this will determine which option to buy the car makes the most sense financially. To compare apples with its apples, let's say we want to buy this Peugeot 408 that comes with a retail price of 32,320. For each finance option, we will put a 20% deposit and we would finance the car for 4 years. Before we show the calculations, it's important to understand that the interest rate you receive will depend on several key factors, and this is very important. The first factor would be the economic situation at the time. That usually determines interest rates. The second will be your personal credit score. And lastly, is going to be the loan amount and term, because different amounts and different terms attract different interest rates. That means that even though the final figure might be different for two people, due to these factors, the same finance option or the same option to buy the car would be the best. The first option we spoke about is cash, and that is a straightforward option. You pay the full amount, no interest, and you own the car. The remaining options I'm going to be reading out of my phone here. Please bear with me if I don't look at the camera directly. For leasing, based on my inquiries, I was required to pay 9 months of monthly payments of £310, which turned out to be £2,795. After 4 years, the total lease cost would be £17,396 or £4,349 per year. For hire purchase, if we drop the 20% deposit, which is £6,464, and we are financing for 4 years, as we said earlier, I was quoted an interest rate of 13.9%. With all this, the monthly payments came down to £694. That means that the total price I will pay for the car at the end of the contract is almost £40,000. And at this point, you own the car fully. If you decide to sell the car at this point, after research, we found out that this car would have a 49% depreciation. And that means that after 4 years, the car would be worth £15,836. This is just a guide, right? And is based on estimates as at today. Who knows, in 4 years' time, the second-hand market could be crazy, just like it was in 2023. From these figures, we see that it would cost us around £23,976 in 4 years, or £5,994 per year. The next option is PCP, which is often the most popular choice presented by car dealers, and it's for a reason. This is not surprising because it is the most beneficial to them and is usually at your own expense. With PCP, we have a monthly payment of £433 for 4 years with the same deposit of £6,464. Remember, with PCP, you have an agreed balloon payment that you can activate at the end of the period. For this car, that number is £12,637. So the total cost comes down to £27,248 or £6,812 per year. If you want to own the car, it could cost you £39,885. Now let's compare two numbers. The first will be the cost if we decide to sell or return the car after the initial 4-year term. And the second set of numbers that we'll look at will be if we decide to keep the car or buy the car after the 4th year or the end of that contract. We want to see what will be the cheapest and what will be the most expensive in both scenarios. If we decide to sell or return the car, the cheapest will be cash, of course, and the most expensive is PCP, as you can see on the screen. And if you decide to keep or buy the car after 4 years, also the cheapest option will be cash, and the most expensive is PCP. Looking at the numbers, we can see that the worst financial decision would be to do PCP and not buy the car after the term. And if you ask a lot of people, this is what they do, right? They do PCP for 3-4 years and then they renew the PCP, or they get a new deal, a new PCP deal with a new car, and that cycle keeps continuing every 3 or 4 years. The numbers show that this is the worst financial decision. But if we decide to pay the balloon payments at the end of that initial term, even though it's still the most expensive, the difference is usually not that much different from hire purchase. Therefore, for most people and for most cars, it's generally a better financial decision to buy a car and own it for a longer period, ideally over 5 years. If we look at the PCP option, and let's say instead of renewing that contract, you decide to buy the car, you pay the balloon payment, and you keep that car for another 4 years, your yearly cost isn't so bad. And this, of course, doesn't factor in things like maintenance that could be positive or negative, depending on the car that you do choose. Also, if we decide to pay cash, which is the cheapest, some would argue that there is an opportunity cost to doing that by just dropping, for example, 32,000 lump sum, and that money, if you pay the deposit, you could invest the balance in, for example, the stock market and get an average return of 7 to 10%. And I hear that argument, but in the current climate, this argument isn't valid. As you can see, if I choose to pay cash, I would have a guaranteed return of 13 or 10%. In today's current climate, we can see that if I choose to to pay cash, I would have it guaranteed 13 or 10%, which was the interest rate that I was quoted to do either of the finance option, which makes a lot more sense than 7%. So think about it. Is there a situation where leasing makes more sense than buying or financing the car? Because we haven't looked at leasing in detail. This makes more sense, especially if you want to drive luxury cars that has a very rapid depreciation. These cars lose a significant portion of their value so quick that it only makes sense to lease the car. So leasing allows you to drive a luxury car for a lower upfront cost and avoid situations like the substantial depreciation burden when selling it later, or maybe the high maintenance cost that is usually associated with luxury cars, because in most cases, maintenance is usually covered by the dealer during that lease term, or if there is an issue with the car, the dealer also would fix it. Another reason you might want to consider leasing is if you constantly crave the latest car models and enjoy the flexibility of switching cars frequently. The last reason I think leasing might be good for you is if the car is a part of your business expense and you can take out that cost when doing your tax reporting. How about buying? Who would it make sense for? I believe if you have the following criteria, it makes sense to buy and not lease. One, those looking for cost savings in the long term. As we have seen that buying a car often becomes more economical with time, considering the total cost over several years. Second would be those that prefer to own their assets outright. Third would be if you drive more miles than usual, as leases typically have a mileage limit, and exceeding this limit can result in hefty fines. Fourth would be if you enjoy customizing or modifying your car. The fifth type of person that buying would make more sense to would be if the idea of not having a car payment after the loan is paid off is exciting to you, and of course you have a lot more financial flexibility in the future. The sixth will be those that are less concerned about their vehicle's depreciation. The seventh will be those that are comfortable with different out-of-pocket expenses, maintenance and repairs after the warranty or the contract has ended. And the eighth will be those who value the option to sell or trade in their vehicle at their own discretion without any restriction. And lastly would be those that are planning to keep the car for many, many, many years. So what is my preferred option today based on my current circumstances? And that's very important, right? My preferred option would be if you have the funds, buy cash. That's what I would do. With that, you don't have to deal with interest payments and all the other payments that comes with that. And also, personally for me, I would buy a used car that is around 3 years old, which from research is the best time to buy a used car because it has depreciated substantially while still in good condition and without much wear. And in some cases, it still has the manufacturer's warranty. If you enjoyed this video, you would like this one too. Don't forget to subscribe and share. See you in the next one.